Recently, we've talked about companies such as Intel laying off about 15,000 employees, which equated to about 10% of their overall workforce. We've also talked about companies like the one I worked at, Ultimate Kronos Group, who laid off 14% of their workforce. And fortunately, we have more of these kind of layoffs to talk about today. One company laying off 7%, another laying off 11%, and then a third laying off 15% of their total workforce. So unfortunately, these kind of layoffs are continuing to this day. But I do have some articles I want to go over that kind of discuss what's going on with these organizations so we could take a little bit of a deeper dive. And unfortunately, the 2024 layoff crisis is still well underway and really showing no signs of stopping. Let's dive in. Our first article of the day is from apnews.com, and it's headlined, "Cisco cuts thousands of jobs, 7% of its workforce, as it shifts focus to AI and cybersecurity." We talked a little bit about what's going on with Cisco in a previous video, but I still want to talk about it here today, kind of go over exactly what's going on with the layoffs as far as what we know at the time of this recording, and then also going to talk about those two additional companies as well. But as far as Cisco goes, the article says that Cisco Systems is planning to lay off 7% of its employees, its second round of job cuts this year, as the company shifts its focus to more rapidly growing areas in technology, such as artificial intelligence and cybersecurity. The company, based in San Jose, California, did not specify the number of jobs it is cutting. It had 84,900 employees as of July 2023. Based on that figure, the number of job cuts would be about 5,900. In February, Cisco announced it would cut about 4,000 jobs. And previously, a couple of days ago, when I recorded the last episode on this, the article we were reading said that they let go of 4,000 people in February and they're going to lay off 4,000 more people. But now this article, a couple of days later, is saying the numbers might be up to 5,900. And by the time you actually see this video, it might be even higher than that, unfortunately. The networking equipment maker said in June that it would invest $1 billion in tech startups like Cohere, Mistral, and Scale to develop reliable AI products. It recently also announced a partnership with NVIDIA to develop infrastructure for AI systems. Cisco's layoffs come just 2 weeks after chipmaker Intel Corp announced it would cut 15,000 jobs as it tries to turn its business around to compete with more successful rivals like NVIDIA and AMD. Intel's quarterly earnings report disappointed investors, and its stock took a nosedive following the announcement. In contrast, Cisco's shares were up about 6% after hours on Wednesday. So as far as money goes and stock price, I find that quite interesting. Intel announces their layoffs and their stock takes a dive. But Cisco shares, from everything I'm reading, they announced that they're going to have more layoffs upcoming, and their shares went up about 6%. So maybe people just don't have any faith at all anymore in Intel, which I guess you can't really blame them. But with Cisco, maybe they're thinking, hey, well, they're making some moves to save some money. They're making some moves to make sure that they can be as profitable as possible. With Intel, it's just like, oh, this is just another big mistake that they're making and they can't do anything right. The article goes on to say, in a foray into cybersecurity, Cisco launched a Cybersecurity Readiness Index back in March to help businesses measure their resiliency against attacks. Cisco Systems Inc. said Wednesday it earned $2.16 billion, or 54 cents a share, in its fiscal fourth quarter that ended on July 27th, down 45% from $3.96 billion, or 97 cents a share, in the same period a year ago. Excluding special items, its adjusted earnings were 87 cents per share in the latest quarter. Revenue fell 10% to $13.64 billion from $15.2 billion. Analysts, on average, were expecting adjusted earnings of 85 cents per share on revenue of $13.54 billion, according to a poll by FactSet. For the current quarter, Cisco is forecasting adjusted earnings of 86 cents to 88 cents per share on revenue of 13.65 billion to 13.85 billion. Analysts are expecting earnings of 85 cents per share on revenue of 13.74 billion. Edward Jones analyst David Hager said Cisco is starting to see demand recover after it slowed down over the past few quarters, noting that product orders were up 6%, even when excluding those from its recent acquisition of cybersecurity firm Splunk. He added that the restructuring will help offset the earnings impact from interest expenses associated with financing the Splunk acquisition and will rationalize combined forces. So I don't know all the ins and outs of Cisco and what's going on there, but from what I'm reading and comparing it to articles we've read about places like Intel and Dell and things like that, it does seem like they're, from a stakeholder perspective, from a stock perspective, they are making at least moves, whether they're right or wrong. We know the trends and the buzz is all around AI, and they're investing a lot of money into artificial intelligence. Now, do I think it's good that they're laying off people to do that? No. I feel like they should be able to take some of those Cisco trained people and move them over to maybe the new companies, or I think they're putting about $1 billion funding into some startups. Well, get some Cisco people over there. I understand the reality of acquisitions and mergers and how that usually means, if you have multiple companies, a lot of people are doing the same thing and you don't need repetitive tasks and stuff like that, but it'd be nice to at least move some people over and cut that layoff count down some than just being able to just lay off all these people from Cisco while apparently you still have enough money to invest in other companies. I don't know if there's any cross-training that could be done, but I feel like there is. But I think investors are at least happy that they are making moves, right? It's not like Intel where the CEO's like, this came from out of nowhere. I'm surprised. Maybe we will get into AI. You compare his just being completely lost in the high weeds to Cisco's like, well, we have a plan. Yes, it's not going well per se, but we are starting to see sales. We are making investments, and we are going and investing in new companies that are all around AI. So at least investors seem to be happy with the direction of Cisco. The next company I want to talk about is Eventbrite, and this article is from Business Insider. And as always, all of my articles are referenced down in the description below, so you can check them out for yourself and read the whole thing. But I just want to talk about the things that are important to our discussion that we're having today. The article is headlined, Eventbrite is laying off 11% of its staff. And the article goes on to say, the ticketing and events platform Eventbrite said on Thursday that it's letting go of around 100 employees, roughly 11% of its staff. The company said it expects to incur up to $7 million in severance and cost reduction actions tied to the layoffs. Eventbrite previously cut 8% of its workforce in February 2023. So yeah, Eventbrite does a lot of events and obviously and other things like that. But have you used Eventbrite? Let me know. Because I've always felt that was for like smaller things. Like if I wanted to go to a career fair or a networking event, it was never really big money tickets like Ticketmaster, right? Ticketmaster seems to basically have a monopoly on new sales, and their fees are absolutely crazy. Gone are the days where you could just go up to the box office and purchase it. The idea should be, well, you can go to the box office and you can purchase your tickets, or you can get them on Ticketmaster and you have to pay a convenience fee because you don't have to leave your house. But nowadays, there is no option. If you went to the box office, they would probably tell you to go buy them online at Ticketmaster. So that doesn't really help you out at all. You're not just paying for convenience, it's just the price of things, right? With DoorDash or Uber Eats or something like that, you could say, all right, well, I want them to deliver it to my house. I'll pay a little bit of a convenience charge, but you also still have the option to go to the restaurant. With concert tickets, there's no options anymore. You either pay the crazy high convenience fee, quote unquote, at Ticketmaster, or you pay even more for the resale tickets on StubHub or something like that. And whatever happened to the fact that it's poaching tickets or scalping tickets and there's rules against how much you can charge for tickets? Because I feel like that's not really a real thing in America anymore. It used to be, well, you can't charge that much for tickets and you can't, I think, charge over the face value. Well, that's completely gone. So you can't charge over the face value of the tickets if you sell the tickets in person, like outside of the event, but you can charge well over the asking price if you just sell the tickets online. How does that make any sense? And a lot of times when we are looking at articles like this of these big, massive layoffs, I always have to ask the question, well, what's the severance going to be? Are they going to take care of the people that have been there for a long time? Do they have money saved away for a severance? And when we talked about the idea of Stellantis and other companies like that offering voluntary layoffs, right? If you can take a voluntary separation for the company, you'd probably want to do that because eventually they're going to run out of severance money. So you want to be one of the first ones to be bought out before they quote unquote run out of money. Here with Eventbrite, at least it's saying they have money stored away for their severance packages. So I don't know what a good price per employee would be, but having $7 million in severance and cost reduction actions tied to layoffs, I mean, I don't know. I guess that's really not as clear as I thought. Is it just $7 million in severance, or is it at least $6 million in severance? I don't know what cost reduction actions would be. So maybe it's not a full 7 million stored away. And it's saying Eventbrite previously cut 8% of its workforce in February 2023. So that's another thing we're talking about a lot. You really got to pay attention. Long gone are the days of being at a company for 20, 30 years, getting a pension, finding one really good company to work at for the rest of your life. No, you need to be, if you're working at an organization and they're publicly traded, you need to be going and looking at their quarterly reports and all kinds of press releases and stuff like that so that you're not blindsided. So yes, Eventbrite is laying off 11%, but this article says that previously in 2023, last year, they laid off already 8%. So if you were fortunate enough to survive the 8% layoff of 2023, you should already have had some good options, if not already out of the company, by the time reduction in force happens in 2024. The article goes on to say, one current Eventbrite staffer, speaking on the condition of anonymity to be able to talk freely about a sensitive internal situation, told Business Insider they expected the layoff given Eventbrite stock value had dropped off in recent months. And this is what I'm talking about. You got to pay attention. I mean, the company that I used to work at, I mean, their stock has completely plummeted in the past few years. And some people I know are still working there, but they're just trying to keep their head down and they're seeing layoff after layoff with all the people around them getting let go. And that's a traumatic experience to be in. I mean, it's terrible to lose your job, but it's also really terrible to sit around wondering if you're going to be next and just seeing all your friends and all your colleagues that you've worked with for 10, 15 years just being kicked out to the curb. So it's really not a good situation for any of the employees, whether you survive the layoff or not. That's smart that someone is saying, hey, I kind of expected this to happen since I'm seeing the stock price go down, right? So we talked about looking at the reports of how the company's doing. Well, if the stock price is plummeting and going down and they've already had layoffs, it's time to come up with a plan B because you're going to be on the chopping block soon, probably. And hopefully this employee had some backup plans or at least started really storing up cash or cutting their spending and are in a better situation to handle the layoffs if they, saw the writing on the wall. The article goes on to say the company is currently trading at around half its value from the start of the year. Eventbrite reported second quarter earnings on Thursday with net revenue of $84.6 million, a 7% increase year over year. Oh, that's at least a positive step, but I guess they have to have the layoffs in order to see these gains. However, gross ticket sales dropped from $890 million in quarter two 2023 to $840 million in quarter two 2024, a roughly 6% decline. The company lowered its revenue outlook for the third quarter and fiscal year of 2024, citing the decline in paid ticket revenue as it struggled to attract and retain creators. The company also said it's offering new pricing for creators, including a free tier that cut into its revenue forecast. And yeah, once again, I don't know all the ins and outs of Eventbrite. I'm not an Eventbrite historian or anything of that nature. But to me, what I've seen from a distance and using their services a little bit was, they are for, smaller organizations, smaller gatherings. If there was any way for them to get into concert sales or ticket sales of other things, I really don't know other events, but maybe lecture series of like really famous people and motivational speakers, I don't know. But the small creator economy of these small scale organizations events is probably not going to get the job done. So hopefully they can figure out some way to increase their overall revenue and maybe provide ticketing options for some higher ticket events. The article goes on to say its stock at one point dropped around 18% in after hours trading. In light of the recent revenue outlook and in keeping with our commitment to financial discipline, we have taken the decisive action to significantly reduce operating expenses, the company wrote in a letter to shareholders. The company also announced on Thursday that it would promote its CFO, Lanny Baker, to Chief Operating and Financial Officer. It's hiring ex-Meta executive Samantha Wu as Chief Marketing Officer. So they're making some moves, changing some executives around. So it's good to see companies not just sitting around and just waiting for the Titanic to sink, that they're actually making some moves. Will they be successful? I don't know, but at least they're trying something. But another article that I found tied to this when I was just looking for the latest news on Eventbrite was an event on Eventbrite, which I found kind of ironic. And the event was scheduled for Friday, August 16th. And the event is called Back to Bliss, Wellness Passes, helping those impacted by a layoff in Los Angeles. For you or who you know has been impacted by a layoff, no matter your trade industry, our Back to Bliss Wellness Pass services are here. So many moons ago, my friends and I created the first 5-mile 5K run around Mother's Day in the city that I was living in. And I think we did post some things on Eventbrite, but it was not very high entry because we were just trying to raise some money for charity. It wasn't like a $300-400 concert or however much these concert tickets are nowadays. But so yeah, the Eventbrite wasn't making probably a huge amount of money off of that kind of thing. And it seems like there's still little small meetups and other gatherings that you might just be able to post on Facebook these days. I don't know. The event description goes on to say, it seems as if not a day goes by that you don't either read or hear about another major company layoff and thousands that are impacted by it. Furthermore, the main news stories don't always reflect what's going on in the day-to-day of what you see around you and those close to you in life. If you or someone you know has been impacted by a layoff, no matter your trade or industry, our Back to Bliss Wellness Pass services are here for you. So I just thought that was ironic that Eventbrite is having another layoff and one of their main events going on in Los Angeles is to help people who are impacted by layoffs. So I guess this person knew, well, you might be aware of Eventbrite if you've worked there, so maybe come to and pay money for this event so that we can get back to bliss. I just thought that was quite interesting. Our third major company today that I want to talk about that is having massive layoffs is LegalZoom. And this article is from Yahoo Finance. And the headline is, LegalZoom reports second quarter 2024 financial crisis. The article goes on to say, LegalZoom.com, Inc., the number one choice of online small business formations, today announced results for its second quarter ended June 30th, 2024. I am excited to be taking an active and direct role in executing LegalZoom's growth strategy, said Jeff Steibel, Chairman and Chief Executive Officer of LegalZoom. Moving forward, we are focused on driving more resilient, recurring revenue by reorienting our priorities to focus on accelerating subscriptions, a broader go-to-market strategy, and product lineup of legal expert solutions that emphasizes human and machine expertise. We are confident that 3 areas of executional focus will drive sustainable long-term growth alongside increasing margins. And have you used LegalZoom before? Please let me know. Personally, I've been faced with the option to use LegalZoom, especially when I was forming my own business, which thank God turned around the trajectory of this channel and finally gave me the confidence and motivation to now crank out 5 videos a week. It was all about creating my own business, getting everything registered, getting a doing business as name, filing everything with my state, filing everything with the government, doing my taxes, like all that kind of stuff. Coming up with an operating agreement. I could have easily went with LegalZoom. But I felt like it was pretty easy to just do by myself and just to figure out on my own. And at that point, I had the time. I mean, if you're a really busy professional, if you have a bunch of kids, if you have a lot going on, sure, I guess you might want to use LegalZoom to save you some time. But as far as using LegalZoom because it's too hard to do, I definitely don't think that. I'm no legal genius or anything like that, but yeah, I mean, there's enough information on these government websites to figure it out on your own. So it's kind of not a surprise to me, especially with the financial pinch that many Americans are in, that they would not use LegalZoom services as much and just take the time to watch YouTube videos or read blogs and just figure out all these things on their own. Noah Watson, LegalZoom's chief financial officer, said, "We exceeded the high end of our second quarter outlook due to stronger than expected fulfillment. We are reiterating our full year revenue outlook, reflecting a lower macro expectation for small business formations and near-term changes to our execution priorities. In response to these factors, we have realigned our business and cost structure. We have also made the difficult decision to restructure our organization, including a reduction of our global workforce by 15%. So yeah, I told you today that we're going to talk about 7% reduction, 11% reduction. Now this is 15%. We talked about Intel previously in a couple of videos, and that was 10%. We talked about another organization, I think that was 12% previously. And then we talked about Ultimate Kronos Group and how they're laying off 14%. But yeah, this has got to be one of the highest percentage layoffs that we've talked about in the past several months. I mean, 15%, that's a huge amount of your company. So yes, including a reduction of our global workforce by 15% and reducing our planned hiring efforts. At least it's on paper, they're saying we're laying off people, but we're reducing our hiring. A lot of times, like Intel, you see that they're laying off a massive amount of people, but then they're still hiring. And it's just like, well, I thought you couldn't afford those people. And same thing with Intuit. They, I guess, labeled 60% of the people that they fired as underperformers so that they could hire better performers who know more about the company and would do a better job, even though they've never worked at the company a day in their life. So I really don't understand how they're getting that message out to people. But at least according to this article, they're reducing their hiring, which is a bit more appropriate when you've just got done laying off 15% of your workforce. We expect these actions to drive approximately $25 million of annualized savings. We remain committed to driving efficient growth, improving operational efficiencies, and maintaining a strong margin profile. Some milestones recently with LegalZoom are: on July 9th, 2024, LegalZoom announced the appointment of Jeff Steibel, current chair of the board, to serve as chief executive officer effective immediately. So that's pretty recent to make a change in your CEO. So that's like we talked about with Eventbrite. At least they're making some changes at the executive level and not just going down with the ship. On August 7th, 2024, LegalZoom announced restructuring efforts resulting in a 15% reduction of its global workforce. And I'm sure some people will say, well, yeah, they had to get a new CEO so that he could just come in here and start cleaning house. And maybe that's true, but it's better to have a company that is struggling and you're making some efforts to change it than just have a company just waiting around to go bankrupt. LegalZoom expects to incur approximately $5 million in severance expenses in the full year ended December 31st, 2024, related to the restructuring. And this is another company that has money set aside apparently for severance packages, which is a good thing. People won't just be out on their butt with no money, especially if they've been there a good tenure of 10, 15 years. Hopefully they get 6 months of pay to find something new. And this just says it's related to severance packages. It's not severance and cost-cutting strategies. So hopefully all that money set aside, that full $5 million, goes to the people who are impacted. LegalZoom has also reduced and realigned its hiring efforts in line with its 3 execution priorities. LegalZoom expects the combination of these efforts to drive approximately $12 million in savings in the full year ending December 31st, 2024, an annualized savings of approximately $25 million. So unfortunately, the layoff crisis of 2024 is still alive and well. These are just 3 examples of companies laying off a large percentage of their workforce. And what do you think about all these things? Do you think that they're making the right moves? Do you think these layoffs will help and that the company will turn things around going into the future? Or do you think this is just one of the signs and one of the things that is going to lead to the doom of these organizations? Also, do you have any organizations that have made recent layoffs that you'd like me to talk about that we haven't covered here on this channel? Let me know in the comments, and I definitely like to go and make some videos on layoffs of companies that you guys are interested in. To me, it's very sad to see these layoffs are still happening. As someone who's looking for a great, amazing role in technology, it gets more and more frustrating each and every day as I see that companies are not just not hiring, they're firing as many people as possible. Talk to you later.